Do you own a rental property and have been wondering how to make tax season a complete breeze? Or maybe you're just thinking about investing in real estate and want to know how do you keep more of that rental income in your pocket? Well, you're in the right place. Today, I'm going to show you how to navigate the world of rental property taxes. So grab a pen because you'll learn how to save big. Now picture this, you're getting those sweet monthly rent checks, but when tax season rolls around, bam, a hefty bill that you didn't expect. And that's the last thing you want, right? Well, the good thing is that the tax system actually offers some pretty great tax benefits for rental property owners. You just need to know how to use them. So stick with me and I'll walk through the essentials of business taxes for rental properties without any headaches. Hey there, my name is Eric Niem. I own an accounting and tax strategy firm called The Cashflow Doctor. I help business owners and real estate investors understand their taxes, simplify their bookkeeping, and maximize their savings. And in today's video, we're gonna dive into the business tax guide for rental property owners. Now, whether you've got a single property or you're managing a growing portfolio, you're gonna want to know how to reduce your taxable income with some smart deductions. Are you ready? Let's jump right in. So first things first, yes, rental income is taxable. That means everything that you earn from your tenants, whether it's lease, advance payments, or even lease cancellation fees, these are all subject to taxes. But here's the good news. You don't have to pay taxes on the full amount you collect because the IRS will allow you to deduct a ton of expenses related to your rental property. And that's where the magic happens. So what exactly can you deduct? Let's run through some of the big ticket items. Mortgage interest, you could definitely deduct the interest portion of your mortgage payments. Property taxes, yearly property tax bills, you could absolutely deduct those. With repairs and maintenance, if you're fixing a leaky roof or giving the place a fresh coat of paint, you could deduct those as expenses. Insurance premiums. Your landlord insurance can also be deducted as an expense. Now, depreciation, this is the huge one. You could typically spread the cost of a property itself minus the land over 27.5 years if it's a single family home or 39 for a commercial property as a tax deduction. And that's effectively free money. Many rental property owners actually cash flow positive income annually, but after accounting for depreciation, they have a tax loss on paper. But just keep in mind, if you are wanting to look to deduct your real estate losses against your other income from work or business, you're gonna need to either make less than $150,000 per year or be a real estate professional, as a real estate income and losses are considered to be passive activities and are subject to passive activity loss limits. Now, here is a super important distinction that a lot of people miss: the difference between repairs and improvements. Now, repairs are things like fixing a broken window, patching a hole in the wall. These are deductible in the same year as you make them. Now, what are improvements? Improvements are things like adding a new bathroom, replacing a roof. These are called capital expenses, meaning that you can't deduct it in that same year. Instead, what you need to do is spread that cost over several years through depreciation, normally over 5 years, 7 or 15 years. So before you tackle that major renovation, keep in mind that it might not be an immediate deduction, but over time, it could still save you a lot on taxes. Now, tracking these deductions are key to maximizing your tax savings. If you don't have a system in place, tax season can feel like a nightmare. So here's my pro tip. You want to use a bookkeeping software like QuickBooks or even just a simple spreadsheet to track every expense related to this property. You're going to want to keep receipts for things like repairs, supplies, insurance, and any fees that you might pay to property managers. Personally, I love using QuickBooks Online to keep my books straight and document income and expenses. Not only will this help you keep organized, but it's also going to allow you to sail through any potential audits down the road. Now, are you feeling more confident now about tackling your rental property taxes and tax deductions? Awesome. So don't wait until the last minute. You want to start organizing your receipts and tracking deductions today. And just to help you out, I put together a free expense business tracker, which you can download from the link in the description below. It's super simple to use and it's going to make tax time way less stressful. Now, thanks for tuning in. If you found this video to be helpful, hit that like button and subscribe to the channel for more tips on how to save on your business and rental taxes. Don't forget to click the bell so you never miss a video. And until next time, happy renting, happy saving, and keep more of what you've earned.